Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. It's the crash that is going to change a generation forever. And I'm not just talking about massive equity growth. I'm not just talking about a wave of foreclosures damaging potentially millions of people. What I'm talking about is not only that, but also the way people go about purchasing real estate. This crash is going to pave the way for additional laws. It's going to pave the way for consumers to continue to purchase real estate online, which is a big mistake. And it's also going to continue to increase the trends of people migrating out of cities to other more affordable cities because of the overwhelming change in the ability to work from home. Now, I would title this video Bonkers because we are in really bad shape. However, I can't do that because of the YouTube algorithm. And while we're talking about the YouTube algorithm, please guys, do me a favor, like this video for all my effort, subscribe to my channel if you haven't already, and as always, comment. So what we're gonna do today is we're gonna take a look at 4 things. We got to get an idea for how the bubble came into fruition and the devastation that it's going to create when it pops. So the first thing that we're going to go over is essentially what happened during 2020 and 2021. And I'm not just talking about all the free stimulus money. I'm not just talking about the super low interest rates, the PPP loans, right? The school loans being deferred, EIDL loans being deferred. I'm not talking about that. So remember, that still exists. What I'm going to focus on, y'all, is how neglectful the bidding was during 2020 and 2021. How much recklessness there was in our market, whether it was fear of missing out, buyer's remorse, and things of that nature. So we're really going to dig into how unhealthy so many buyers were. Then number 2, we're going to take a look at what is going on right this very minute in our housing market. Now, as you know, the Federal Reserve, at the beginning of this year, started doing quantitative tightening. They're no longer buying mortgage-backed securities. The 10-year Treasury ballooned to 3%. They've increased the federal funds rate. So the Federal Reserve has taken many measures to actually cool our housing market, which is going to lead to a crash. So we're going to look at all of the trends of what is going on right now. Now, number 3, as you guys know, I have been saying that the recession that I'm pretty sure that we're in actually right now is going to be the straw that breaks the camel's back in the housing market. So we're going to take a look at recession and a little bit about stagflation. Now, number 4, we're going to compare the size of this bubble and how quickly it took to form this bubble as compared to 2008. So I want to take you guys back in time and just show you how big that bubble got and how long it took for that bubble to form, so we can kind of compare the devastation that we are about to face. And then I'm going to have some conclusions on how I think that this market is going to be forever changed. Now, remember this, you guys, I am not your financial advisor. I'm a YouTuber sharing my opinions, sharing my thoughts and things of that nature. I am a realtor in Houston and a loan officer in Texas, as well as an instructor in real estate. But this is my personal YouTube channel. Remember that. I'm just trying to share my thoughts with you guys, okay? So where we're going to get started is on number 1, which is what type of neglect were buyers involved in 2020 and 2021 as far as crazy bidding. So first, let's take a look at this Redfin little snippet right now. Take a look at this, you guys. Now, this snippet is a little bit old. This is from Redfin, but I want to show you the state of the market when it was at its most competitive. Many homes get multiple offers, some with waived contingencies. This is the craziest thing. The contingencies are designed to protect the buyers, right? So they're waiving all of the protection that they have, or a lot. The average home sells for about 22%. Look at this, guys. 22% above list price and goes pending in about 14 days. Hot homes can sell for about 37% above list price. That is absolutely bonkers. 37% above list price and go pending in about 12 days. Now what I'm going to do is I'm going to pull up something from Yahoo, and I'm just going to pull up the live article right now, and it's going to go into several different reasons why people are starting to have buyer's remorse. Now remember how powerful fear of missing out has been during 2020, 2021, and actually a little bit in 2022. And what this is all doing, y'all, is magnifying the bubble that we're in, right? All of this reckless purchasing and easy, free, cheap money is making the bubble astronomically big in a record-breaking amount of time. So it's happening very quickly. Take a look at some of this buyer's remorse. Okay, guys, so this is from Yahoo. So it's 5 reasons why pandemic home buyers are having serious buyer's remorse. Okay, this is Yahoo. I'll have it referenced in my description, as I always do. But the number one thing is they compromised too much. And I like how it says this: when you've made several unsuccessful offers on homes, each loss represents another broken dream, which adds to the fear of missing out. These people compromised way too much. Now, number 2, they waived home inspections and underestimated maintenance costs. You guys probably know that obviously to upkeep a house, it takes money, right? You got a roof, you got air conditioning. There's so many factors that come into play when upkeeping a house. Some of these buyers completely waived inspections. Think about that for a minute, right? They completely waived inspections, but not only that, they toured the home online, you guys. They didn't even walk the property. How do you know if it doesn't smell? How do you know if there's not planes flying overhead? How do you know the neighbor's dog doesn't bark? You cannot purchase real estate online. That is crazy. Let's continue. Number 3, they bought a house smaller than they wanted. And this has to do with the lack of inventory. So buying right now, people were overpaying for houses they didn't even love. They bought a house smaller than they wanted. Now, number 4, they wish they spent more time and weighing options. Now, you guys should spend more time and you should weigh options because this is the biggest financial transaction of people's lives. But they were crazy, right? There was a rush of buying. The fear of missing out took over. Now, number 5, they didn't consider the commute. And that may be really bad if people were able to work from home, but are no longer able to work from home and they live really far from their office, because once that honeymoon phase ends when buying a house, which is a lot of the time the first payment on your mortgage, then reality starts to hit. So you guys, all of this reckless spending of purchasing homes way over asking price, way over appraisal value, people rushing, buying things that they don't even want, it has magnified this bubble in a way that we have never seen in the history of the housing market. So completely wacko, you guys. Now, a lot of it, again, was induced by all of this free stimulus money, all of this PPP money, and the fact that interest rates were in the 2%, right? Absolutely crazy. Now what we're going to do, we're going to shift on to number 2. What is going on right now? So we're going to quickly dive in to the trends that are indicating we are in for a crash, and we are already underway with a cool down. Now remember, it's going to hit different metro areas at different times, but take a look at some of these trends. And we're going to reference an article from Redfin called "Home Buyer Competition Falls for Second Straight Month, Hitting Lowest Level in Over a Year." So remember this, you guys. The first thing, remember the trends, remember the formula. The first thing is rates. So everything is following rates. After rates is what? Sales and construction. So rates lead the way. Now we're seeing drops in sales. After sales and construction comes price. Guess what? We're finally starting to see price drops. After price drops comes inventory. Guess what? We're finally starting to see a surge of inventory. Isn't it shocking how this formula works almost every single time? Or is it not shocking because you pay attention? Let's continue looking at these trends right now. Now take a look at this. This has to do with buyer's competition. Nationwide, 6.7% of home offers written by Redfin agents encountered competition on a seasonally adjusted in April, the lowest level since March 2021. So this is still high, but it has dropped to the lowest level since March 2021 as far as people going to bidding wars. So the bidding wars are plummeting. Let's look at the next set of trends. Also from Redfin, the housing market has softened in recent weeks because mortgage rates have surged in their highest level in more than a decade as the government tries to quell inflation. The average 30-year fixed rate mortgage is now 5.3%, up from 3.76% at the start of March, and a record low of 2.65% in January 2021. The rise in rates and home prices has sent the typical mortgage payment for home buyers up a record 44%. You guys, Year over year, mortgages have gone up 44%. If you stop a minute and think about that, that completely breaks fundamentals. The equity surge is also completely breaking fundamentals. It's not keeping up at all with wage growth. This is going to come crashing down in a very violent way. And if you're not prepared, you're probably going to suffer a little bit. So I really hope everyone is preparing. Let's continue on with the trends. The drop off in bidding wars is one of many signs the housing market is slowing. Pending home sales are down 6% year over year, the largest drop since June 2020, and mortgage applications are down 8%. Home tours and online home searches are also falling, and the share of home sellers dropping their asking prices at a 7-month high of 16%. So what do we have there, you guys? So we have the interest rate surging, mortgages up 44%, right? We have sales now, remember? So rates and then sales. We have sales down 6%. After sales is price. 16% of people that listed their homes dropped their price. Next is inventory. And you should start seeing more inventory in your local market right now. But if you don't worry, because this transitioning is going to spread across the nation, and probably within at the most 2 or 3 months, you're going to start seeing this radical cooling down / crash in your local market. Mark my words. Now, the next thing, guys, number 3, let's look into a recession. Now, remember, the Federal Reserve, in essence, actually triggered a recession. Now, I'm not going to go into stagflation, even though I think that we're experiencing stagflation. The reason I'm not going to go into that is one reason: the unemployment rate right now is so low. And I question how low it is. Is it taking, is it a lot of second jobs like Uber Eats and stuff? Is that why it's so low? I'm not sure. But the thing is, guys, if we go into a recession, we're going to have a lot higher unemployment. That's going to put a lot more pressure on the economy as a whole and on the housing market. And that's going to be the straw on the camel's back. And the crazy thing is, we may already be in recession. First quarter of 2022, negative GDP. If there's 2 consecutive quarters of negative GDP, it is a recession. Take a look at this. So here's some key points from an article on CNBC that just came out. Gross domestic product in the U.S. declined at a 1.4% pace in the first quarter, below analysts' expectation of a 1% gain. So they were off 2.4%. Declines in fixed investment, defense spending, and the record trade imbalance weighed on growth. I'm pretty sure everyone knows we have a record trade imbalance. Consumer expenditures rose 2.7%, but because of inflation, it came amid a 7.8% increase in prices. So you guys, here's the thing, okay? The inflation, the runaway inflation right now is really covering up how bad a shape we're actually in. Everything is inflated. We should have record sales right now from companies because they're selling them at record prices. But instead of that, we're seeing that they're barely showing a profit, right? Inflation is masking the true problem here, and that is going to devastate people that are unprepared. Let's continue reading. Question of whether we're living through a recession and just don't know it yet isn't far-fetched. We may be in one. First, tech stocks such as Netflix, Meta, and Coinbase have crashed this year as growth slowed. Pros have bantered that the plunge in tech stocks is hinting at a sharp economic growth slowdown later this year. So you guys, the writing is on the wall. The 2 and the 10-year treasury has already inverted. We're probably in a recession right now. If we're not in a recession right now, you can almost guarantee we are. When that happens, things are going to start going downhill rapidly, right? It's going to happen quick, and it's going to hurt so many people. The fear of missing out is going to shift onto the sellers and is already shifting to the seller side of the housing market. Now, you guys, what I want to do now is I'm going to bring up the Fred economic data graph for median home listing value across the United States. So I'm going to compare the equity growth in 2008, and I'm going to compare the equity growth in 2022, and we're going to see how long each bubble took to form. Take a look at this. So here's the Fred economic data for median sales price of houses sold for the United States, okay? And what I really want to target is, let's go to all the way over here to Q3 of 2002, because that's kind of the lowest point, okay? So from the lowest point to the highest point, which is Q1 of 2007. Okay, so Q3 of 2002 to Q1 2007, the median home went from 178, 100 all the way up to 257, 400. What that represents is a bubble of a 40% increase. So this went up 40%. Okay, so the bubble in 2008, the whole crash 2008, home values went up 44%. But here's the thing, you guys, this here took 4 years and 6 months and ultimately led to a decline, which is from here, Q1 of 2007 to Q1 of 2009 of 19%. So this 19% decline took 2 years. The bubble to form took 4.5 years. Okay. Now, fast forward to 2020. Okay, so let's fast forward to 2020. So we're going to take a look at Q2, which is kind of the lowest point right here. So Q2 of 2020 all the way up to Q1 of 2022. So from Q2 of 2020 to Q1, okay, it went from 322, 600 all the way up to 428, 700. So this equity surge right here, you guys, represents 32%. Okay, so it's a little bit smaller of a bubble per se than the 2008 bubble. So this went up 32%. But here's the thing that I am so worried about. Instead of this taking 4.5 years, this took less than 2 years. This took 1 year and 11 months to come up with this massive spike in equity right there. Okay, so that's why I'm saying, you guys, I am really, really terrified that the housing market that we're in right now is so artificially created because of lockdowns and COVID, with so much reckless, neglectful purchasing, that this crash could very well be worse than 2008, and we could potentially lose more than 19%, which would be higher than 2008 during this crash, right? And here's the thing, a national average of a 20% loss of equity is massive. I understand that values went up 32%, but to still go down 20% from what the high is astronomical and crippling. And that is going to change the landscape for our real estate for generations to come, because not only is it paving the way for how people are purchasing homes, right? They're tech heavy. They're going to continue to do tours online, even though that people are going to get hurt, even though it's going to slow down. When we get better again, when these laws are passed from the federal government, the same problem is going to happen again, and it's going to happen even worse. There's going to be way less people that actually care to go out to look at the house. There's going to be more laws. There's going to be more technology companies that go in that are designed to help people purchase homes. Not only that, we're going to continue to see the trend of mass migration from people leaving expensive cities, going to more affordable cities, because the ability to work from home is just going to continue as we move on through the centuries, as we move on through the decades. Now, another conclusion that I have is all of this reckless spending, all of this craziness, we just showed investors what they can get away with. We showed investors as a whole how foolish we can become as long as they're the puppeteers, right, of the housing market. Where's the inventory, right? The lockdown crushed the inventory. We just showed investors how gullible, how foolish that we can be. Now, I hope that people learn this time around. I want to say they learned the last time around, but I've seen so many people that can't even fathom a crash right now, that can't even fathom a bubble. They don't even understand what they're talking about. So I could tell you right now that a lot of people actually, they didn't learn. So I hope that they learn this time around, you guys. Now, that's going to conclude my video for today. I hope I made a compelling argument. I didn't want to make it too long, so I'm going to kind of cut my opinion short. You guys probably noticed that, or maybe you didn't and you're new to this channel. But don't forget, you guys, comment below. If something hits you in the soul, something hits you in the heart, comment below and tell me what it means to you. And as always, I definitely appreciate you guys. I appreciate all the love. I appreciate the journey. And don't worry, I'm going to tell you when I start buying. I'm going to continue researching data. I'm going to continue showing you guys the trend. Now, as always, if you're out there investing in real estate, I really wish you luck, and I hope you win.